Right.
Uh, hey, good evening. Welcome to hashtag Got Money. Job seekers, job keepers, and all of these initiatives that have been introduced by government, while they're interesting, some of them can be a wee landmine, and job keepers is looking a bit like that. It was really nice that the government made an announcement, but then nobody could figure out how on earth they were going to deliver it. And yet it's still a wee bit of a mystery. So what I've done is I've reached out to Amanda Amanda
Cly.
Cly. Jesus, I'm getting it, Amanda. It's only taken me a year. I've reached
Yeah.
out to Amanda Cly, who is our Got Money accountant, and said, look, Amanda, you're going to have to come and unpack this a little bit for all of us, really. I'm a sole trader. I'm in the same boat as everyone else. So where are we at with job keepers, Amanda? What's happened?
Okay, so basically the government is really trying to keep businesses afloat, right? So they initially announced the first job cash boost, which is basically if you employ people, you get your PAYG refunded to you, whatever you lodge on your business activity statement for your PAYG withholding from your employees. They'll give that back to you. Or they will give you, if it's less than $10,000, they'll just give you $10,000. The most they'll give you is $20,000 over 2 trenches. Does that make sense?
No.
Okay, so you're a sole trader. Let's just say you had an employee, right?
Okay.
And your each quarter you would have to lodge your business activity statement, and you would
Yeah.
have to declare wages, and there would be PAYG withholding as part of that business activity statement that you would have to remit to the tax office. So to help you out as an employer, the tax office said, right, well, we'll make it so you don't actually have to physically pay that PAYG withholding to us, the tax office. And in fact, if that withholding is less than $10,000 for the quarter, for the March quarter, we'll just give you $10,000 as a credit in your integrated client account. So you can use that to offset your GST. You can get it refunded if you need it for cash flow purposes to help your business keep functioning during this crazy time. And the same applies for the June quarter as well. So you lodge your business activity statement. It has PAYG withholding in it. You'll get a minimum of $10,000 for the March and June quarter each, up to a maximum of $50,000 if you withheld a huge amount. You know, if you had lots of employees.
So this is all dependent on whether you employ people?
Correct.
Okay,
So
so
that
you've
was
got okay.
that was the first round of stimulus. And then they came along and said, right, sole traders were excluded. Contractors and that kind of thing had been missed out in that kind of first lot of stimulus. So they've come back and they've said, right, we're also going to help employers by helping them out with the wages, so they don't actually have to pay the wages themselves. The government's going to reimburse them for some wages, and that's the job keeper, and we'll go into that in a second. And we'll also widen it so sole traders can actually access it. Beneficiaries of a trust, if you trade through a trust or a partnership, that kind of thing, they can actually access some stimulus because they hadn't been included in the first round.
Yeah,
so,
there was a bit of a bloodbath on that too, wasn't there? When they made that
yes.
announcement, they excluded sole traders. I mean, I remember walking around the house going, oh, this is going to be fun. So
Yeah.
that I'm really glad that they decided to pick up the sole trading space. So how does that space operate?
Okay, so basically how it works is the government look at your eligibility first. So if your business turnover dropped by 30% or more compared to the March quarter in the previous, the month of March in the previous financial year. So basically they just want to make sure that the business is actually suffering because of the virus. A lot of businesses, well, not a lot, quite a few businesses are actually thriving. You know, people are getting home gyms, you know, office works, you know, all that kind of stuff. They're actually thriving. They want to make sure that your business is actually suffering before you're eligible to receive it. If you are eligible, and they look at your the month of March, your GST turnover for the month of March 20 versus the month of March in 2019, or They let you project, and if you think that your business will suffer in April or May, then you can select those and register based on an anticipated drop of more than 30% in turnover.
Because a lot of people, like in our space, in the real estate space, in our sector, in fact, every sector that I know of, other than those that have been quick enough and nimble enough to get on and recreate themselves in this space, have suffered. How do they make application, or is this an accountant first conversation?
You should talk to your accountant first, but you can actually make the application yourself. So there's a few different ways or processes that need to be gone through first. There needs to be an application first. So that means you log on to your MyGov account. If you don't have access to MyGov, so generally, your bookkeeper will have access to it and they can do it on your behalf, or your accountant can if you don't have access to your business ATO portal via MyGov. There's a specific JobKeeper section, and step one is you fill out the enrolment process, and that's basically just saying, yes, we believe that our turnover will drop. We believe it will drop in either March, April, or May, or June. Select the month, and then you also need to know how many employees will qualify. So how many of your employees will be able to access the $1,500 a fortnight. There's a separate section if you're a sole trader and you're operating just under your own ABN. It's a different box to click. And then if you're doing it for your employees, so you actually employ people, you just need to either make sure that your software is STP compliant, which is single touch payroll compliant. And that means that all the payroll that you lodge is actually done electronically. It was a requirement for employers to be registered for STP from the 1st of July, all small businesses and large businesses. Some people got an exemption, in which case they'd have to follow through a different manual method, which is stepped out through the MyGov portal. But basically, step one, you enroll through the portal, the MyGov account, and it's just a few clicks basically. And then you just make sure that you're reporting the employee's payroll correctly through the STP, which will probably require some bookkeeping assistant or accounting assistance if you're not all that computer savvy. And there's also another stage, which is good for people that weren't earning $750 a week. If they earned less than that, they were casual, for example, they worked a couple of days a week, they got a few $100s a week. The government's saying that if you're eligible for this $750, then you should be getting $750 a week, regardless of what you used to earn. And
that's good, isn't it?
Yeah. So the employer is then responsible to make sure that they're declaring that correctly through their single touch payroll. As a like the JobKeeper top up, each employer software, payroll software has different kind of tweaks to it, but essentially it's the same. If your employees earn more than $750 a week or $1,500 in the fortnight, there's not a whole bunch to change as far as the payroll reporting. It's just you lodge the STP wages as per normal. It's just if you earn less.
Do you pay tax? Do you pay tax on this money that you're getting from job keepers?
Yes.
And how do they calculate that?
Well, it's just a normal, so basically the payroll software, the tax office has got set rates of tax to withhold based on the pay cycle and the amount. And the payroll software, if you're using a Xero or a MYOB, it calculates that for you. And it's just standard withholding, PAYG withholding, that the software calculates for you. If you do it manually, there's tax office ready reckoners like tax tables, and it basically, every $50 that you earn, it sets out how much tax to withhold for you.
So what if you're getting job keepers and you've got your businesses softened, but you're still earning money? Does that affect your payment amount that you're getting from the government?
No. The only eligibility is your turnover needs to have dropped 30%. So even if you're still earning money, like the government still wants the business to run. That's the whole point of it. So they want to take the pressure off the employers, and rather than the employers having to put their hand in their pocket to pay their staff, whether they're actually physically working all the hours, or they've had to take some time off and only work a couple of days a week. The government's saying, we're going to help you. Here's $750 a week or $1,500 a fortnight to pay your staff, so you can keep functioning and you can keep the business running. You can keep your employees in touch with the business, keep them working, and try and get the business to survive this whole the whole crisis. And hopefully, fingers crossed, it'll settle down in the next couple of months.
What a great thing that they're doing. Don't you agree?
Yes, absolutely. Yep.
So the only initial problem, if you've got a large employee role, is that you have to bankroll it. Is that right? Until the government payment starts coming through?
Correct. Yes, there is. So the government isn't going to be paying out the $1,500 fortnightly payments until May. So if the employees are entitled from the 30th of March, which is the first date that the JobKeeper comes into play, if they're entitled to it, they should be getting paid that. And even if they don't earn $750 a week or $1,500 a fortnight, they needed to be earning that $1,500 a fortnight from the 30th of March. So initially it'll be a bit of a drain on the business.
That's the issue, right?
Yeah,
that's the thing. So they're going to have to cash themselves up to manage those payments until the government catches up with them. How long is the payment scheduled to run for?
For 6 months.
Oh, okay. So there's a full 6 months with the payment. Do you have to complete reporting every month?
Yes, you do. Yep. So the first lot of basically substantiating the drop in turnover, the reporting for that opens on the 4th of May. So what you should be doing now is getting the enrolment process started. So jumping on MyGov or talking to your bookkeeper or talking to your accountant and getting that enrolment process started. Make sure that the pays that have been processed from the 30th of March to date have been processed correctly. So anyone that earns under the $750 needs to get the $750 a week, $1,500 a fortnight. And it needs to be declared through an electronic form, whether that be single touch payroll with your Xero or your MyOb or your QuickBooks, whatever software you use. Some accountants actually have the STP software within their own package, so they should, if you're just a small business and you're used to just working off Excel spreadsheets and stuff like that, your tax agent should be able to lodge an STP compliant form on your behalf, or there is a manual form that you can complete and submit to the tax office.
So my accountant actually sent out an email to, I believe, everybody that they take care of, offering to manage that for their clients. Are you doing that within your own business?
Yes, we are.
So you're busy.
Oh, absolutely. Absolutely. This and the enrollments opened up on Monday. So we've been absolutely flat out registering all our businesses and going through and sorting out which employees are eligible. Now, you must note that you can only get the JobKeeper payment from one source. So if you've got employees that work, for 2 or 3 different employers, they can only claim it from one.
Oh, yeah, God. Do you imagine? They make more money in the crisis than they ever did when they were working.
Yeah. But also there's the nomination forms that need to be completed. So they don't need to be sent into the tax office. Just the business owner has to keep them on file in the event of the tax office, doing an audit or requesting to see them. And that declaration nomination includes a declaration that they're not obtaining it from another source. So then they qualify.
Yeah, you've got to be careful of that too. I can imagine that there'd be some fairly fraudulent behaviour in this climate. There always is, and it's just the nature of human being. What are you charging your clients? What's a fair rate to charge your clients to manage all this for them?
Well, I mean, it varies. It depends on the number of employees. It depends on how, what type of reporting they're doing. Like if they're doing all the reporting themselves, then that requires less of our time. We just got to make sure that it's fine. We're charging $55 for the registration, and then it's basically just a function of time of how long it takes for us to review the STP system. If they're already, businesses were required to be STP compliant on the 1st of July anyway. We had our clients on it well before that anyway. So we know that a lot of our clients are up and running, and it's just a registration process. And just to make sure that the $750 payments per week or $1,500 a fortnight has been adhered to from the 30th of March.
What about those clients that only have a bookkeeper that want to use your services? Are they able to do that?
Yeah, definitely. Yep. It doesn't cross over the bookkeeping scene at all. I mean, bookkeepers should be, I would have expected bookkeepers to be up, and ready for this. It is a role of a bookkeeper to at least process the pays and stuff like that. And the function is available through the portal, which most bookkeepers would have access to anyway, just so they can keep tabs of what's going on with the tax office, in the respective businesses. So that process, it is something that the bookkeeper can do, but it's equally something that we can do on behalf of the business as well.
Look, I'm a sole trader, and I know when I first started my business, I didn't have a bookkeeper. I did everything on my own. So it's nice to know that if someone's out there and they're struggling and they're not sure how to just even start this, they can come straight to you.
Absolutely.
So this is this will be an ongoing, a new entity to your business, essentially, won't it? So you've got 6 months worth of work to do.
Yes.
How do you feel about and I'm asking everybody this question. I'm really interested in the accounting space. How do you feel about how the government has responded to this?
Look, I think they're doing a very fair job of it. We've got a lot of property investors on our books, and I know that they're kind of not getting a look in at the moment. But you've just got to understand that the government's really just trying to keep the economy going, and that's what everyone basically survives off is businesses running, employment, buying and selling, and that's what the government's really trying to focus on. And look, at the moment, I think they're doing a very fair job. I think property investors are kind of being a bit forgotten, but equally, should the taxpayer be subsidising somebody's, 4th and 5th investment property? Hard call, and they've got a very, very hard, precarious role to play, and very difficult to keep everyone happy.
That's an interesting question because I'm in that space, and I had Hayley Mitchell on, who's the tenancy management legislation. Hayley, she's so incredibly smart. Yeah, there's been there are issues with tenants not paying rent, and the only great thing is we've finally got banks responding. Banks are responding really well to this, but everybody thinks that there's no penalty to the investor, and there is. There's compounded interest at the other side of this. The investor will ultimately pay for what they're in, for what we're in. So,
and equally cash flow for the investor has to still pay the council rates and the body corporate fees and all that kind of stuff. And if the rent isn't coming in, they've got to come, that's got to come out of their pocket. And if they're the ones that are on the 750, they've been stood down or been made redundant or whatever, they've got to come up with the cash to keep everything flowing for their investment properties. They may have been in a really great position, a couple of months ago and be able to afford it, and now they're struggling as much as well to try and keep on top of it.
It's a really valid point. I've got an investment property in my water bill, and my rates came in the other day. So yes, you're right. There is that. You're going to notice too that earnings and incomes have dramatically reduced as well. So it's just as well the government have got you as an accountant doing this, because you've still got the same level of workload. Have you laid off any of your staff?
Look, we had to, purely just because of the level of work. We had a lower level individual kind of level, and that kind of work just totally dried up. Where this is more of the higher end, requires bookkeeping, accounting knowledge, in depth, being able to work out clients' financial positions and understand, employees, how the employees are dealt with within their books and stuff like that. And unfortunately, the staff member that we had just didn't have those skills, and we just didn't have the space, the financial space to keep supporting.
You're not the only one, Amanda. Look, there's so many businesses have had to do that. And I think it's really interesting. I was interviewing someone this morning, and we were talking about commercial real estate. And I love going into the studio, as you know, but I've got a great, big, beautiful mic here. I don't have to go into the studio if I don't want to. Do you think that paying those high commercial rents that that we will start to reconsider if we really need to run our offices in the same way once we come out of this?
I really do think that this is going to change not only how offices are run, like you said about the space required. I think the retail sector is going to change significantly. I think so many people now are forced into ordering online, which is going to force businesses to set up warehouses and that kind of thing to service an online presence where they may not have before. And I was actually talking to another client this morning, but the Westfields of this world tend to have their rents kept at a level that keeps the businesses just surviving. Do you know what I mean?
Yeah.
And I think a lot of the smaller brands will be kind of forced, or may not forced, but may choose to go down the online presence, because so many people are forced into that space now, and they might get to like it. I mean, I know I do. I'm enjoying, my shopping, my parcels getting delivered to my front door rather than having to go and find a car park at Chadstone and wander around and, deal with the crowds and all that kind of stuff.
Yeah, it's interesting. I can't wait to see what happens at the other end of this. Any taxation trickery you want to end with?
Well, look, I mean, people are working from home, so any kind of costs you've incurred for working from home, just keep track of them. If you had to buy monitors and stuff like that, obviously that kind of thing is tax deductible. Computers, the tax office have increased the home office rate, so then you don't necessarily have to pro rata, internet costs and stuff like that. Basically, just keep track of how many hours you work from home, and that can give you a home office expense tax deduction, which most people might not have had before, or at least not had a significant deduction for. Look, I think the 750 for people that hadn't earned 750 before, look, you might not get as big a refund as you thought, because you might be bumping up into a next tax bracket, that kind of thing. But yeah, I mean, look, other than just working from home and that kind of thing, it's almost business as usual, really.
Yeah,
just keep a track of your hours, keep a track of anything that you're out of pocket for.
Isn't it 80 cents an hour or something? Isn't there a tax rider for that?
It is. Yeah. So it's I can't remember it off the top of my head, and I should know. It's either 80 or 82 cents, I believe. And that's meant to encapsulate, phone calls and your internet fees, your heating and cooling, depreciation of your office equipment and that kind of stuff. So there's two different ways that you can do it. There's the old rate of 52 cents an hour, 52 cents an hour that you work from home, and you still have the option to pro rata your internet costs, your phone costs, depreciate your desks and stuff like that. If you had to go out and buy a desk, it could work out to be a better deduction to do it that way. Or if you didn't keep receipts, you can't be bothered calculating it all, you can just claim the 80 odd cents an hour.
I live really close to where you work, and that 99-cent bike shop across the road from Dendy Park, there are lines out there, Amanda. There are lines. So are bikes tax deductible now? Are we able to write off these things that we've purchased as a consequence of being locked down?
No, unfortunately, it has to be work related.
Damn it.
That's kind of health related, unfortunately. So they just don't give you any leniency for that.
I thought we could put that down as a mental health for work.
Oh well, look, It'd be nice if they would let us. I haven't heard anything yet.
Well, it'll be nice. Thank you for joining me. If anything else happens in the space, will you let me know?
Absolutely.
How do listeners find you, Amanda?
So we've got a website, maykly, maykye.com.au. Yeah, get in touch with us via phone, 03 9585 7555. More than happy to help, even if it's just to give some advice or just point people in the right direction.
Oh, thanks, Amanda. That's the biggest thing. I was looking at job keepers the other day, and it just looked like a minefield. And it's okay to go to these information websites, but it's the language of it is almost, it's so difficult to understand, and it's almost like tax speak. And I'm like, I do not know the first thing about this. I'm getting Amanda on the show.
No, that's fine. And look, I have actually found that they do tend to be geared towards, accountants. It sounds like they're geared towards accountants than, the business owners. So we're happy to, help, clarify, guide, assist where we can.
And just the fact that you're going to do the setup is amazing. Thank you for your time today. I appreciate it. Take care, everyone. Don't forget, it's Radiothon. We need your money, and I think I'm the appropriate show to ask for it because I'm #GotMoney. If you need anything in the money space, please reach out to me, or go to gmtv.com.au where you can watch all of these interviews from our YouTube channel. Take care.